Good morning. It is May 15th, 2023. And today we got a signal that the US dollar was overbought. So we're going to head over to the Longbow dashboard and talk about that a little bit, as well as a couple new features I thought I would mention. So here in the dashboard, I'm giving you the dollar and gold ETFs. So let's look at it. This was overbought this morning, but it's come back down just a little bit. You know that this refreshes about every 30 minutes. So let's click on the UUP. That's an ETF for the dollar. Obviously was super bullish till the fall in October, and then it's been pretty much bearish since then, although we've had little pops. One of the reasons being whenever there's a risk-off sentiment, as you probably know from the banking crisis and now potential debt ceiling impasse, that's when the dollar tends to strengthen. People have a flight to quality. So if I open this up here, you can see we were hitting lows. It was time to buy, but now we're heading at the top end of the range. Dollar is overbought. So if you're thinking about shorting the dollar, this might be a good time, not from, I'm saying, a fundamental perspective, but from a technical perspective, you're there. And then similarly, sometimes we talk about, well, what is the correlation or negative correlation to gold? Well, it's not working perfectly right now, right? Part of it also is in times of concern, people tend to buy the dollar. So what you're seeing here is more of a flight to safety. That's why it's making sense that both of these are pretty strong at the same time. Otherwise, you would tend to see when the dollar was up, gold would be down, but that's not what we're getting right now. In fact, here you can see the gold is bullish on both the short and intermediate term. And then for the dollar, it's been more neutral. You saw it kind of bouncing around, but then bullish on the medium term, which we would expect over the next, call it 1 to 2 years, this to be actually in a bearish formation. So we haven't put on our full, short dollar trades, which would include going long EM. We have dipped our toe into the water, if you want to call it that, a little bit on this, but we think it might be a little bit premature given that there's some event risk going on here, and we think in the next couple quarters. But with that said, let's take a look at the gold. So you can see, gosh, this has been on a tear. So going long gold was the right call. And then the trading range obviously was super wide, banking crisis. You see the white line, so the security price really going up there. It trimmed back down, hit the low end of the range, buy, hit the top end of the range, sell. Now we're kind of in the middling here. And so it makes sense. We're in the middling of the range, but people still are pretty concerned about event risk going on. We also wanted to tell you a little bit about these regimes. So, you know that the regime being growth, which is more like Goldilocks, is when the rate of change of growth of GDP is accelerating. And then the rate of change of growth of inflation is decelerating. The difference between that and reflation is that a rate of change of growth of inflation is actually accelerating. So growth is strong in both of these regimes, but here you're seeing inflation weakening. We're not in these. You can see this is a very low signal. It's not going on. In fact, you're only getting just very mild signals. It's been bouncing around stagflation to deflation, which I imagine you understand from the last couple of months. But stagflation is when both of these is when the rate of change of growth of GDP is decelerating. So things are slowing down, but the difference here is stagflation is when you've got the rate of change of growth of inflation going up, and then this one going down. So this is, what you would call tends to be the most challenging for equity markets. But this has been a little bit different period. So we've been bouncing around because we get hot inflation numbers, cold inflation numbers. And so people have been bouncing around these two areas. But we wanted to point that out because if you do click on those tabs, so we want to look at one of these. We're going to look at the stagflation regime. This will tell you up here how strong of a regime it is. And then what we do give you is the positions that tend to do the best in that range that you would want to play, so that you can check out the different trading ranges yourself. So if you think it's going to be a Goldilocks, you'd go over here and obviously be looking at the signals on that tab. If you think it's more like deflation, you'd be heading over to this tab. So it's up to you to decide where you think the macro is headed, but we've tried to give you some of the best ETFs and securities that you would consider owning, given where you think the macro environment is. That's the tip for today. We look back to seeing you tomorrow.